Hello, what's up? I hope all of you are doing great and you're doing awesome. So welcome to this video in which we are going to discuss about the amendments in the topic called small company. So the name of the topic is small company, but it is a big amendment. So big amendment in the sense that the limits of the small company has been revised. So first of all, before discussing the amendment, I would like to give you a quick recap of what is a small company. So small company is a company which is not a public company. So if someone comes to me another day and say that it is a public company, I will not even think about it being a small company. So if it is a public company, you rule out the possibility that it will be a small company. So it is a company which is not a public company. Then it has to satisfy two conditions. Sir, what are the two conditions? The paid up share capital of the company should be less than or equal to 4 crore rupees. This limit earlier was 2 crore rupees. Before that 2 crore, it was 20 lakh rupees. But now, 50 lakh rupees. So from 50 lakh, it was revised to 2 crore. From 2 crore, it was revised to 4 crore. So the paid up share capital should be less than equal to 4 crore. I hope this point is clear. And the turnover as per the preceding financial year should be less than equal to 40 crore. So 4 crore and 40 crore is the limit that you need to keep in mind. How does it work? See, if I talk about doing the audit of financial year 22-23, in that case, I need to see whether the company that I am auditing for 22-23 is it a small company. So to see that, I need to see the limits as on 31st March 22. As on 31st March 22, the paid up share capital should be less than equal to 4 crores and the turnover for the financial year 21-22, it should be less than equal to 40 crore. If these two conditions are satisfied as on 31st March 22, then in that case for 22-23 it will be considered as a small company. I hope this point is clear to all of you. Now, in what cases a company will not be treated as a small company even if these conditions are satisfied? So first of all, if it is a holding company or it is a subsidiary company, do it with me. If it is a holding company or if it is a subsidiary company, then in that case, it is not treated as a small company. Or if it is a company which has been made for charitable purpose, which is called a Section 8 company, then in that case also, it is not termed as a small company. And the last one, a company which has been incorporated or a body corporate which has been incorporated under any special act. So the third point is a special point, the special act point. That is what you need to keep in mind. So if anyone asks me what is a small company, so first of all I will say a company which is not a public company. First point. Second point involves two conditions. The paid up share capital should be less than equal to 4 crore. The turnover as per the preceding financial year should be less than equal to 40 crore. If the 4 crore and 40 crore conditions are satisfied, I can say it is a small company. But remember, these three conditions should not be satisfied. Sir, what are these three conditions? First of all, it should not be the holding or subsidiary of any other company. It should not be a charitable company. And the last point is it should not be governed by any special act. Now, sir, how it will impact our audit topics? This is applicable for both CA final as well as CA intermediate. In case of CARO 2020 reporting, the CARO 2020 reporting is not applicable on a small company. Please remember this point. Okay, sir. So if it is a small company, I will say CARO 2020 is not applicable. Sir, what if? What if it is a small company, but the borrowings in the financial year exceeded 1 crore rupees. You remember in CARO we used to refer to 3 points of private companies. What were those 3 points? For CARO to be not applicable on a private company, we refer to 3 points. What were those 3 points? First of all, the paid up share capital plus reserves and surplus should be less than equal to 1 crore rupees. You remember this point? Yes, sir. The turnover should be less than equal to 10 crore rupees. Remember? And the borrowings in the financial year, the borrowings in the financial year should be less than equal to 1 crore, and this limit is seen any time during the financial year. So these limits are for that financial year जिसका you are doing the audit. These limits are for that financial year जिसका you are doing the audit. So paid up share capital and reserves and surplus on the balance sheet date, turnover on the balance sheet date, and borrowings we have to check throughout the year, that throughout the year our borrowings should be within the limit of 1 crore rupees. If these three conditions are satisfied, then only CARO is not applicable. But sir, again, small company is also a private company. Is this concept clear to all of you? Small company is also a private company. What if it is a small company but it doesn't satisfy any of these three conditions? So what can be the case? The only case can be borrowings exceeding 1 crore rupees. If the borrowings are exceeding 1 crore rupees, then in that case, you will say, since it is a small company, CARO is not applicable to it. Is this point clear to all of you? Yes, sir. So this is the note I have given here. Please read it carefully. In case a company is covered under the definition of small company, once a company becomes a small company, it will always and always remain exempted from the applicability of order. Order means CARO 2020. Even if it falls under any of the criteria specified for private company. Now I am giving you three examples, a short quiz before you. Please apply your mind and tell me what should be the answer, and it will be wonderful if you can give me the answers in the comment section. Let's start with this short quiz. So first company is Hera Fairy Private Limited. Since it is a private limited, it can be a small company. I'm not sure about it. Let's see the previous year figures. Paid up share capital 2.5 crore. Is this within the limit of 4 crore? Is this within the limit of 4 crore? Is this less than equal to 4 crore? The answer is yes. This condition is satisfied. Turnover is 35 crore. Is this within the limit of 40 crore? The answer is yes, it is satisfied. Since it is a small company, I will not even look at these limits. I will not even look at the current year limits. Since it is a small company based on 31st March 22 figures, it is a small company for financial year 22-23. So for financial year 22-23, when the audit is done, CARO is not applicable on this company. Clear hai? Clear it? Come on, sir. Now let's talk about the next company, which is Bhagam Bhag Private Limited. As on 31st March 22, paid up share capital less than equal to 4 crore. Turnover, oh my god, turnover crossed the limit of 40 crore. So now this is not a small company. This is not a small company. Now I have to check the three conditions of private company. What are the three conditions? Let's see. Paid up share capital including reserves and surplus within 1 crore, condition satisfied. Turnover within 10 crore, condition satisfied. Borrowings within 1 crore, condition satisfied. So all these conditions are satisfied. So I can say again, CARO 2020 is not applicable to Bhagam Bhag Private Limited. Last point is regarding De Dhanadhan Private Limited. As on 31st March 22, the paid up share capital is 4.5 crore, which is crossing or breaching the limit of 4 crore. Again, it is not a small company. Let's see whether it is meeting the criteria of being a private company. Paid up share capital including reserves and surplus within 1 crore. Okay. Turnover 8 crore within 10 crores. Okay. Borrowings 65 lakhs within 1 crore. But some additional information is given. What is that? During the year, 1.5 crore was borrowed and repaid. That means at a point during the year, the borrowings were above 1 crore. If at any point during the year borrowings cross the limit of 1 crore, then in that case, CARO 2020 will be applicable. So here you will say that CARO 2020 will be applicable. The company is not exempt. Why? It is fulfilling the two conditions, but it failed to fulfill the third condition. That's why CARO 2020 is applicable. I hope these concepts are clearly understood to you. Now the last 2 points. As an auditor, I can accept 20 maximum statutory audit of financial statement. But in that 20 limit, small company is not applicable. Small company is not considered in that limit of 20. So for small company, I can accept how many audits? Please give me the answer. For small company, come on, I'm testing you. For small company, what is the maximum audits that I can accept? Sir, the maximum audits is 30. But how I got this answer of 30? Please refer Chartered Accountant Act 1949. We studied this point in professional ethics, that in professional ethics we studied that for all the private limited companies the limit is 30. But there are two types of companies for which this limit of 30 is not considered: dormant company and one person company. For dormant and one person company, the limit of 30 is not applicable. For them, you can accept unlimited audits. But if I talk about small company, even though in Companies Act there is no limit, but in Chartered Accountant Act 1949 there is a limit of 30. I hope this point is clear. And the last point is rotation of auditors principles are not applicable on a small company. So that was all about the amendment of small company. Now a quick question before all of you. This question was asked by ICI in a recent mock test paper. You have to tell me whether CARO is applicable or not. So first of all, it is a private limited company. So let's check whether it is a small company or not. Paid up share capital and reserves are 150 lakh. What is the paid up share capital? Paid up share capital is 90 lakhs at the end of financial year 2021. Is 90 lakh within the limit of 4 crore? Yes, sir. Now what is the turnover of 2021? Is the turnover given? Yes. Financial year 2021, the turnover was 18.50 crore. Is it less than equal to 40 crore? Yes. So it is a small company. Now tell me one thing. During the financial year 21-22, it borrowed 80 lakhs from a bank, 140 lakhs from bank B. So overall, the borrowings have exceeded 1 crore. But will we think about it? No, sir. Since we know it is a small company, it is exempted from CARO. So the right answer will be CARO 2020 will not be applicable, as the company will fall under the exemption provided under the order for small company as per section 285 of Companies Act 2013. So that's all about it. We'll be coming with future amendment videos on this channel, BB Virtuals English. If you like this video, do give it a thumbs up, and yeah, subscribe the channel for more such videos. Let's learn with fun. Have a great day ahead.